Welcome back. You're with Halftime Report. Let's take a check on what's happening in our personal finance corner. Harsh Roongta of apnapaisa.com joins in to answer the queries sent in by our viewers. Hi Harsh, thanks very much for dropping by. Our first caller, Jaikishan, is already on the line with us from Lucknow. Hi Jaikishan, what's your question?
Hi.
Hello.
Hi, go ahead.
Madam, actually I want to know, I'm a retired bank officer.
Okay.
So I just want to know how much money I should keep in a FDs and how much I should keep in a mutual fund so that I should get regular dividend. And my second question is, which are the mutual fund they are giving good returns on our investment on regular basis?
Okay, and the corpus that you want to put to use now is between 10 to 15 lakhs as a lump sum?
Exactly, lump sum.
Okay, Harsh?
So I think Mr. Jaikishan, since you are a retired person, there is the bigger thing that you have to do is to differentiate between how much risk you can take, which is maybe say 5-10% of your portfolio, maybe max 15%, and the balance obviously you would want to put up in a fixed income kind of a security. You can put it in fixed deposits to the extent that the income from them is not exceeding the minimum chargeable to tax, which is about whatever is the minimum chargeable to tax that's applicable to you. Beyond that, I think it might make sense for you to look at debt funds, which could be short-term income funds. In fact, today there is an opportunity that you can look at long-term government securities funds. They are called gilt funds. You can look at long-term gilt funds where there is a risk a little bit of price movements being adverse, but assuming that interest rates move down over the next 2-3 years, obviously the return you get from it post-tax, if you hold on to it for 3 years because of indexing, your post-tax return from that can be pretty good. So I think and you can look at hybrid funds where a portion is in equity and a portion is in most of it is in debt. So I think, to summarize, essentially do it in fixed deposit to the extent the interest and other income that you have is below your income chargeable to tax, so that there are no TDS issues with it. For the balance, you should look at a mix of a hybrid debt fund of the where 80-85% would be debt and about 15-20% could be equity, or you could also look for a portion in a long-term gilt fund. In terms of schemes, some schemes have been suggested. For hybrid mutual funds, you could look at an ICICI Pru Balanced Advantage Fund, or you could look at an ICICI Pru Equity Income Fund, or an HDFC Multiple Yield Fund. If you want to look at a long-term gilt fund, you could look at ICICI Pru Long-Term Gilt Fund. If you're looking at a short-term plan, you can look at HDFC MF Monthly Income Plan, short-term plan. So effectively, that is the way I would advise you to do it.
All right.